What about valuations when we look at technology companies, especially newer, smaller, or mid-cap technology companies? It seems like some of these valuations may have gotten a little ahead of themselves. I mean, is there a tech bubble of sorts brewing?
Oh, I don't know that I would say that broadly. You might have some valuation excesses at the individual company level, which is not my area, but technology happens to be one of the two sectors on which we have an outperform rating. So we look at it more from a macro perspective. The continued need to invest in productivity and efficiency, a tremendous amount of pent-up demand that came through the last cycle because the 2001 recession really hit profits and businesses hard, and they went through their deleveraging process during the bulk of the last decade. So the capital spending cycle was fairly de minimis. We had a consumer-led expansion the last time. It was not a business capital spending-led expansion. So you're talking about a decade-plus level of pent-up demand that I think is going to start to feed into the economy, and I think it will be more CapEx-driven, and that directly feeds into technology. But I do think selectivity is becoming more important when you get at this stage in a bull market.
What about manufacturing? I mean, if we've seen anything, it's that the manufacturing sector in this country, whether you talk about automotives or industrial manufacturing, is going through a reckoning. We're no longer a manufacturing-based economy. We really haven't been for a while. What will that mean in 2011? How will that change, especially when you talk about this recovery and jobs, and will it be a jobless recovery?
Well, I think what it means that the economy continues to evolve. I mean, basically, England outsourced to New England back in the 1700s. New England outsourced to the Carolinas later on. And so basically, from a low-cost environment, you are seeking the even lower cost to become even more competitive. So what it means is that we're not going to be continuing a downward trend for employment, for standard of living, et cetera. It just means that people are going to be looking for more jobs, newer jobs in healthcare, in finance, and in increased technological areas of manufacturing.
But those sectors can't create all of the jobs. So we just heard from President Obama in the tax compromise announcement this week that he will also allow U.S. companies to write off their investments in 2011 completely. He's obviously trying to incentivize growth and job growth in areas that need it most.
Well, I think we are going to be able to, if you make sure that you do improve the education standard. What's interesting is that Chairman Ben Bernanke, in his interview over the weekend, said that the unemployment rate for the college educated is at 5% already. It's those who do not have college educations, high school or less. They're the ones that are experiencing the bulk of this unemployment rate and are, in a sense, the ones who are going to be suffering through this jobless recovery. So I think many of the proposals are, instead of just handing money to individuals in the form of unemployment benefits, it's let's use some of this money to force people to learn new skills so that they can become contributing members of the new society.
What about healthcare? This is a sector that month after month in the jobs report we see is doing better than most others. Schwab, it's on the outperform list. S&P, though, has some concerns about the sector. Is that given the fact that we don't know where regulation, what the results of that will mean? I mean, so many rules still to be written.
I think certainly there's an awful lot to be written. I think that's one of the reasons for the concern. And it's not just with health care, it's with financial reform, it's with sovereign debt, et cetera. It's going to stay on the stove. It might be pushed to the back burner, but it's going to stay on the stove because you really just don't know what's beneath the surface. I think what we're doing is we're peeling away the leaves of this artichoke and hope we don't find a rotten core. So a lot of the programs did have expenditures, increases in taxes, 100 to 700 pages into the overall document, that I think that's why the government now says let's sort of pull back on a lot of these earmarks because it ends up increasing our budget deficit.
What about from Schwab's perspective in terms of healthcare?
Well, we do have an outperform. It's a little bit more of a fundamental call than it is a macro cyclical call like on technology. It's just the broad swath of companies are relatively inexpensive, so it's a valuation call. It's a sort of risk. It represents the other side of the barbell to an obviously much more cyclical recommendation on technology. I do think actually it will continue to be one of the areas of job creation, and I think we are, to your detriment, you underestimate the ability for the U.S. to create new jobs, to create new industries, to take advantage and leverage technology, and not just in the traditional sense, but medical technology. And it's just my natural optimism that brews when I think we're going to be able to pull ourselves out of this again with the ingenuity that has always pulled ourselves out. It is different. Sam talked about the education gap, all of those things. I just think that I also think another powerful trend is the fact that from a cost perspective, this whole outsourcing concern that a lot of people still have, I think that was more yesterday's story than tomorrow's story, because the cost differential that used to exist, whether it was wages or real estate or compliance, any of those things, has narrowed significantly. For two reasons.
Even for manufacturing?
Well, for two reasons. One, the cost of labor in a lot of the emerging markets, particularly in China, the cost of property, real estate, et cetera, has gone up, and the same things in the United States have gone down. So in my travels to China this summer, I started hearing a lot of this term called deglobalization a lot of people were talking about the incentives, financial incentives for a lot of U.S. companies to keep people, plant, and equipment right here.